The Florida real estate market is teetering on the edge of collapse. Today we're uncovering why institutional investors are fleeing and what it means for buyers and sellers, and what's next for the Sunshine State. In the past 6 months, institutional investors have listed over 20,000 homes, a staggering 35% increase as compared to last year. And these properties are being sold at deep discounts of 10 to 15% or more. And there are many markets that are seeing much steeper discounts. In Miami-Dade County alone, a portfolio of 50 homes was recently listed at an 18% average discount from their appraised values. And this is not a small trend. It's a seismic shift, with major players like Blackstone, Invitation Homes, and American Homes for Rent, which have slashed their Florida portfolios by 18% since January. But in order to understand the sell-off, we need to examine the forces which are driving it. The Federal Reserve's aggressive rate hikes have doubled the cost of borrowing, with 30-year mortgage rates climbing from 2.65% in 2021 to well over 7% today. And a study published by Florida Atlantic University reveals that homes in major markets are overvalued by an average of 33.5%. And property insurance premiums have surged by 33% in just 1 year, with some homeowners seeing increases of 50% or more, which truthfully pales in comparison to the 100% of people who are getting a sunburn making this video. Hurricanes, flooding, and rising sea levels making some areas seem increasingly risky for long-term investment. And new proposals aimed at limiting investor activity are creating uncertainty in some markets. But let's break down the stats. Inventory has surged. Supply of single-family homes has jumped from 1.3 months to 2.7 months year over year. The median time to contract has risen from 12 to 31 days in some markets. And time on the market usually leads to price reductions. 28% of active listings in Florida have had at least one price cut, up from 12% last year. And institutional purchases have dropped from 28% of sales in 2022 to 19% in Q1 of 2023. And these are lagging numbers. Wait till you see what the current numbers are. And if you're looking to track foreclosures, you're probably not going to find them through the MLS or through the realtor organizations that exist, because on paper, there don't appear to be any. However, if you check out foreclosure.com, I think you'll be blown away by the amount of foreclosures that are actually happening right now, which creates a tremendous opportunity for the smart, prudent, disciplined, well-capitalized investor. But foreclosure starts are up 67% year over year, signaling growing distress. And please keep in mind, it only took 10% of the overall market to be in distress last time, the last time the market crashed, to bring down the national average by 30+%. And it was much worse in some markets. And every market will trade differently. The sell-off is not uniform. There are some markets that are seeing much greater activity. Corporate listings surged 42% in Orlando, with a noticeable cooling in the vacation rental market. Tampa Bay, investor-owned properties are being sold at an average 13% discount, especially in suburban areas. Jacksonville is up next. Investor listings are up 31%, with pandemic-era purchases now flooding the market. And in South Florida, my market, my hyper-local market, condo listings from corporate sellers jumped 28%, with many offering buyer concessions to close deals. And speaking of deals, I'm in a listing of mine right now. I've got two in the Half Moon Bay community, which is located in Hypoluxo, which are extremely nice, both for sale, both for rent, and both with some pretty incredible water views. So if you're thinking about buying, selling, or investing in Boca Raton, Boynton Beach, Delray Beach, Wellington, or really anywhere in South Florida, please reach out, because if you're buying, we will get you the best deal possible, and if you're selling, we will find the one buyer on planet Earth willing to pay more than anybody else, irrespective of market conditions. Because ain't nobody overpaying on my watch, and ain't nobody not finding the one buyer on planet Earth willing to pay more than anybody else if they must sell. But make no mistake, the shift is here and the shift is real. The days on market and the price reductions simply don't lie, which creates tremendous opportunities for certain groups. Increased inventory, roughly 22% year over year, means you've got much more choices and far more negotiating power. You finally have leverage to negotiate the best deal humanly possible. And price reductions are common everywhere, with 33 to 35% of listings seeing discounts averaging close to 6%, and much further in different markets, depending on the price point. Because luxury homes in my market have massive price reductions, which simply would have been impossible a few years ago when the market was in a frenzy. And keep in mind the regulatory uncertainty that exists right now. So you must be informed, you must stay ahead of the potential rules targeting investors in many major markets. Which brings us to the big question. Is this a crash, or is this simply just a market correction? Are we in for a soft landing where the market cools gradually and leads to stabilization, or a sharp correction where there is a steep drop in prices followed by a quick turnaround, a massive rebound, just like we saw post-2008? Or will it be a prolonged slump, years of price declines and very low activity? Or more likely, there will be a segmented market where some areas remain resilient and others face sharp declines. I suspect Florida's diversified economy and ongoing population growth will very likely prevent a full-blown crash. However, the rapid retreat of institutional investors signals that there is volatility and change right now in today's market. But you must be prudent, you must be cautious, and you must be aware that falling prices could potentially put buyers underwater in the short term. So whether you're buying, selling, investing, or just watching from the sidelines, the Florida real estate market, the Florida housing market is in uncharted territory right now. So stay informed, stay prudent, disciplined, and cautious, and be ready to act when the time is right. And if you're ready to buy, sell, or invest right now, please reach out, because we would love to help. Now, I've noticed that most of you who watch have yet to subscribe. Please help me out and smash the subscribe button now. It means the world to me. Give it a like, leave a comment down below, and I'll see you on my next video.